Hi, good morning and welcome to today's morning report with me, Rich Perry, market analyst at Handtech Markets on Thursday the 5th of February. The European trading session has got off to a little bit of a weaker start, and that's basically come on the back of the reaction to the news overnight that the ECB has decided that it will no longer accept Greek debt as collateral for exchange for repurchase agreements for Greek banks. Now, basically, this just means that it's sort of a technicality, really. The ECB has previously waived the rule on this collateral because it generally only it's only allowed to accept investment-grade debt as collateral, and Greek bonds are or Greek sovereign debt is junk status. So they had an agreement to waive that rule for Greece, but they've just decided to ramp up the pressure a little bit on this whole negotiation tactics that the Greeks are engaging, and just trying to play a little bit of hardball, it seems, and that's impacted Greek assets certainly significantly, with the Greek 10-year now spiking to 18%, and also the Greek stock market sharply lower as well. There's also been a reaction overnight on the Wall Street markets were sharply lower. They were considerably up, 100 points up, over 100 points up on the Dow, but that closed basically flat, and the S&P was also down 0.4% into the close. So a sharp correction into the close on the back of that. That's followed through into Asian markets with the Nikkei 1% lower, and also the UK. And also the FTSE and the DAX are lower at the open as well today. Not hugely, 40 points on the FTSE, and the DAX just 25 points down, but still it has impacted sentiment. Sentiment also yesterday reacted on the Forex markets. There was a reaction initially on the euro and sterling, for example, whereby the initial reaction was for those markets to just drop over 100 pips on both, over 100 pips on the euro, and a slight correction back on the on sterling as well. But those markets seem to have stabilised in the last few hours with the European session up and running. So it just seems not to have had too much of an impact. Although I will talk about the charts and the impact on that in a little bit. But certainly at the moment, you can see on this dollar index there is still this tendency for the lower highs on this dollar index over the past couple of weeks, really, which is interesting because that just reflects this general trend of euro recovery, and which I've also sort of pointed out yesterday, which I think is also translating through to sterling recovery as well. Sterling on the brink of a breakout, so we'll talk about that as well in the charts. But the big impact on sentiment yesterday as well came in the oil price. A very significant decline on the oil price, around 8-9% down on WTI. But there's no disastrous move yet. The support is still being formed slightly above this old downtrend, which had been resistance. So that's interesting, and it's also above the 21-day moving average as well. So that's on the oil price. But certainly at the moment, the sentiment has taken a slight turn for the worse, but still nothing too drastic yet. Now, the announcements we're looking out for today is the Bank of England at 12 o'clock noon UK time. Is no change expected there on the announcements of quantitative easing or interest rates. But that comes ahead of next week's really important quarterly inflation report, which is the much more deciding factor on sterling, for example, when the Bank of England gives its inflation expectations and growth expectations as well. So nothing really expected today at 12 o'clock. Now, we've also got the jobless claims for the States, the US jobless claims. That's expected to come in slightly higher at 290,000, but up from 265. But last week we had a significant decline from, I think I'm right in saying it was Boeing taking on a lot of workers. So that's expected to just retrace slightly, but it seems to be that we're still seeing jobless claims around the 300,000 mark on a consistent basis. So that takes me to the chart of the day and the DAX. We had a strong breakout on the DAX on Tuesday, which had a strong gap higher, in fact, and that left a gap open. But that gap was yesterday filled. That gap broke out above On this daily chart, it says 10,828, although on the intraday chart it's 10,804. I think that was an auction issue, but it's still the DAX broke out, and we've actually seen that gap filled. Came back to fill it almost to the pip, 10,803, before pulling higher again. So that is actually a bullish signal. That is the bulls coming back to fill that gap and accepting the new level and pushing higher. So that is a positive technical indicator there. Now the other factor we've got to look out for is the momentum indicators still remaining very positive. On the daily chart, the RSI is still strong, MACD line strong, stochastic strong, so that's good. Now onto the intraday chart, where you'll see this gap fill came in strongly, and also today as well. In fact, if I zoom in a little bit more, we had that slight dip at the open to 10,822, and it seems to have found support. It seems to be accepting this new level of support. The other fact is this 55-hour moving average is now a pretty decent basis of support. Supported these few lows here, and then you could argue also it's now coming in to form the basis of support. So that's 10,744 and rising. Also, you've got the intraday hourly chart, the hourly RSI, which finding support consistently above the 40 level, maybe even 45 on a consistent basis. So that is very interesting that we're getting still the bullish configuration on this RSI on the hourly, and also on the MACD lines as well, consistently above neutral. Stochastics have just turned up from around that 35-40 mark as well. So it's a lot of interesting technical indicators coming through here, which suggest that this little dip on the DAX is still in charge of the bulls are still in charge, and further gains could well be seen. Now, if we see a break back above 10,985, obviously that would result in an all-time high again and further upside. But it certainly looks like this is a nice consolidation. You're looking for probably purchases around that 55-hour moving average, which would be ideal, but you've got this nice breakout support around that 10,800 mark to use as well. So still remaining on the bull tack on the DAX, and it looks positive. So I wish you good luck in your trading today on the DAX, and I'll speak to you later. Thank you.